All right, welcome into a Market Day Report. See if we can get a camera on me here a second, but in the meantime, we'll just go through these markets. Thanks for tuning us in here. I'm Scott Shellady, otherwise known as the Cow Guy, and we are taking the baton from Mr. Tony St. James. We'll see if we can get things up and running here for you soon. All right, let's go to the corn. Look at this. We've got a decent board, 2 1/4 cents better to 4 3/4 cents across the board. We're going to start with D's. That's up 4 1/2 cents to 433.5. Look at that. Some pretty good going. Remember, we settled right around that 100-day moving average yesterday, and it looks like we've broken through that considerably. So we've moved higher here again. The low is 428.5. So we're only a couple ticks off that settlement price all night. And again, here we are at 433.5, just about 3 ticks off the high of the day. March, that's up a nickel, 451.5. Let's move right along to the soybeans. Let's go to the soybeans and see. That market's off here. We're 4 1/2 cents lower in the front month, 10.52 3/4 as NOV. All right, that's about 10 cents off the low of the day and about 11 cents off the high. So that is right smack dab in the middle of the range. The Jan's off 4 cents to 10.71.5. And again, that's about just over a dime off the lows, and we're about 11 cents from the highs, 10.5 cents from the highs. So that's soybeans. We're about 4 cents lower across the board there. Wheat in Chicago wheat, putting on some decent double-digit gains here. Tees, wheat in Chicago is up 15 1/4 cents to 614 1/4. And again, we're still 3 cents, just about 2 3/4 cents off the high of the day and well off the lows. We've had a big range over there, about 21 cents, I'm going to say, right? March, that's up 17 cents to 636.5. All right, that's wheat in Chicago. How about the hard red in Kansas City? 22 1/4 cents better there, and the 620.5, right? Not bad. March, 21 3/4 cents better to 635 even. That's the hard red in Kansas City, and that's about 2 cents off the high of the day. We've had, again, another 27-cent range. All right, that's some pretty good going in the hard red. Let's move on to the spring wheat in Minneapolis. What's going on there? 15 3/4 cents better in the D's to 650.5. A penny off the high, well off the lows by about 18 cents. Moving out to the March, that's up 14 3/4 cents to 671 even. And that's a penny off the high there as well. That's the spring wheat in Minneapolis. So why don't we take a look at cotton. We'll get to our guest analyst. Cotton is, drum roll please, 26 points better here in the D. 73.35 is last there, 35 points off the high of the day. Let's bring him in. It's Mr. Riley Schwieger. He's our next guest analyst. Riley, thanks for being on the show. He's with CHS at the home office in River Grove Heights, Minnesota. Let's talk to Riley and see what he's got to say about things. What jumps out of you there, sir?
Yeah, I would say volatility is the word of the day in the energy space. What's really driving that, obviously, is what's going on in the Middle East with Iran's attack against Israel yesterday. That drove us higher significantly yesterday, and I think we were seeing a continuation of that here this morning. Israel has since responded, saying that they intend to target Iran, and whether that involves oil infrastructure is what will be our focus, because I think the important theme here that's pricing in a little bit is that there just really has not been a fundamental disruption thus far. That does not mean there won't be. Obviously, the risk premium and the risk on move is evidence that there is a risk that could happen. So we're going to have to keep watching that day to day here. Part of the reason we also pulled back is, we're talking about supply side and potential supply disruptions, but demand and the demand environment we're in globally is just a little bit softer. And I think that just limits some of that upside risk. Specifically here in the U.S., we had the EIA report looking at inventories. We saw a surprise crude build, partly because we saw production up last week and a pretty significant drop in refinery utilization. And then demand, as I said, we saw gasoline demand off over 7.5% last week, and diesel demand off nearly 10%. So the sensitivity, it's there. The risk premium is there, but at the end of the day, the demand remains soft, and we're going to have to continue to watch interest rates and how the economy reacts to that.
I mean, you've seen what the crude oil has done over the last few days. I mean, obviously it's in the right smack dab in the crosshairs, but I think that's going to be with us here for the short term for sure. I don't think it's going away anytime soon. I appreciate you coming on, Riley. Thank you very much. Riley Schwieger, he's with CHS up in River Grove Heights. We're going to bring it back here. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with me right after this.